Good morning, I'm Neeraj Chan. Welcome to the trade setup. It's a day that is devoid of too many news. So I must tell you the post-trade setup part on today's trade setup, which focuses on specific stocks, is not a very lengthy one. But let's get started with the top global cues firstly. I mean, much like what the US markets did, I think we'll have some bit of a boost in Asia. Okay, let's start with this, the global roundup first. The EU has approved the partial Russian oil ban. Oil actually holds onto some bit of gains because the much talked about supply boost did come about, and US and some of the others lauded Saudi Arabia for doing that, but apparently it was not as strong as the markets anticipated, which would help crude prices come off. So oil is holding on to the gains, 116, 117. It's not cracking beyond that. That's the point I'm trying to make. And amongst other news, Goldman Sachs says that the emerging markets will outperform on a likely dollar peak. Now, will the dollar, or has the dollar indeed peaked? Um, Multi-trillion dollar question, isn't it? Let's wait and watch. But the US markets did okay. So while the stock specific cues may not be very strong, I think the global market cues are looking okay because US markets did okay. And Asian shares, I presume, are looking set to advance after this 2-day snapping of the slide that the US markets have done. I mean, 1.8% for the S&P or 2.6% for the Nasdaq is pretty strong, and futures too, by the way, are doing okay. Keep in mind, Japan, Australia, SGX, Nifty are all indicating positive start. Hong Kong and mainland China shares are not on. CBOE VIX came off even further. The 10-year yield stayed okay. Bitcoin marginally higher. Would have loved the crude thing as well, but nevertheless, the crude is holding on to 117, as I said. Now, what's the trade setup there for the day? Before that, just quickly take a look at what happened in trade yesterday. And remember, it was a day of bounce yet again. Market breadth looking positive yet again. A bunch of mid-sized stocks doing okay, of course. I mean, think of this. Anything which is posted good numbers is duly getting rewarded, right? I mean, Fine Organics is a fine example of that. The stock was at 4,000 when the numbers came out, is now trading close to what, 5,300, 5,400, because it was one of the few specialty chemical companies which actually posted a margin uptick. Century Textiles, not a bad number from the real estate side, and some of the other businesses doing okay as well. And more often than not, you see these stocks not correcting too much and gaining at the first opportunity. So that's actually the key thing that I wanted to mention. Now, what's the trade setup for the day? I think if you look at the trade yesterday as well, the Nifty corrected towards the gap area, 16,350, 400, and recovered from that support zone. I'm not a technical analyst at all. I don't understand technical analysis that well. I will be very honest. But I hear every single day when I read about those emails that come in from experts, or when I talk to some of those technical experts, everybody seems to be focusing on that zone. So keep that in mind. I personally believe that it's very unlikely that the markets will get worried with the select COVID mandates returning and cases rising. Yes, they are rising, and towards the end, we'll have an update there. But I don't think the markets will get too perturbed as yet about these, whether they bring in some restrictions. If they do, they bring into specific pockets and specific sectors, which the market is gung-ho about currently, by the way, and you'll hear Samir Arora talk about it today on Talking Point. But be that as it may, I'm saying that the markets at large are unlikely to get too worried with it. And I think cement will obviously stay in focus today. So in terms of sectors to focus on, cement likely to be the case. By the way, keep in mind, yesterday there was a BNK Securities conference, and everybody apparently was gung-ho on the manufacturing sector. There's companies who were talking about huge demand, and I've noted that down. Engineering, CNC machines, industrials, these are the ones that are talking about demand looking very, very strong for the next 3 to 5 years. So maybe that's a pocket to focus on, if you will. Keep that in mind. For the day today, though, I think cement remains in focus. And why so? Because after Adani's acquired Holcim, which is ACC in Ambuja, and announced aggressive capacity expansion, Ultratech has come out and done the same. They're going to invest about 12,886 crores towards a 22 MTPA capacity expansion plan, which is a mix of brownfield and greenfield expansion. They're going to set up integrated and grinding units and bulk terminals across the country. The total investment comes at a EV per ton of about $76. This is as per the company statement. Now, Why this is interesting? It's multiple reasons. One, of course, it's being done at a much more efficient costing than the deal at which uh, Adani's bought into Holcim, which is, I think, about 170 or 165 or thereabouts, somewhere around that level. Now, keep in mind, viewers, you can't, of course, compare uh, an expansion plan with an entry that anybody else is taking, simply because if an Adani bought into Holcim, they bought out years of the capacity expansion amount that they may have to incur cost if they do it all greenfield. So you can't technically compare the costs. First, I know there's a lot of talk floating around, but I doubt that can happen. I wish, for example, that I was able to talk to Rakesh Arora before I had come on the trade setup, because he would give a brilliant insight into whether this actually is comparable or no. But be that as it may, I personally think that it's not an apples to apples comparison. However, instead of trying to focus on what the nuances of this might be, let me try and get you what brokerages are saying. So Citi, for example, has come out with a note on Ultratech Cement, and then we'll get the brokerage reactions on the other stocks too. But first, Citi on Ultratech, the buy with the target price of 7,600. By the way, there are 3 or 4 brokerages. Morgan Stanley is very bullish. Goldman and CLSA are not. Citi is more measured. I've brought you Citi. They're saying that, and of course, announced the plans to add the 22.6 MTPA capacity. The pricing trends could remain muted and range bound ahead. They are talking about the cement pricing trends. As per Citi, they could remain muted or range bound ahead. There's lack of pricing strength, which could hurt the smaller players, and growth targets of large players could encourage M&A activity, and that's why Citi recommends bottom-up stock picking. So apparently, most people are saying that what this therefore entails is that there will be large capacity coming, because the larger players want to be stronger and not vacate the top spot. As a result of which, there could be a bit of range-bound pricing action in cement, and it's better to kind of stay away from a sectoral call here and try and focus on specific stocks. Now, you'd ask what specific stocks? Well, here's the Morgan Stanley view on some of the cement stocks. The ACC has been reinstated as an underweight at Morgan Stanley. Target price is 2050. Ambuja reinstated as underweight at Morgan Stanley again. Dalmia Bharat reinstated overweight. Grasim reinstated overweight. And Shree Cement reinstated overweight. So the existing leaders, Morgan Stanley believes they want to be overweight. ACC and Ambuja, which have been bought by the Adani Group, they are reiterating that it is underweight. Now, the 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 thing is, what appears to come out from all the brokerage notes that I have read thus far is that they are certainly not getting overweight on the smaller cement counters. If anything, keep a focus on the larger cement counters, and the views kind of differ. But interesting. Citi is a buy on Ultratech, and Morgan Stanley has the existing large players in the overweight space. So maybe you kind of know what it is. I remember a conversation that we did on cement, wherein the outcome that seemed to come was that with an aggressive promoter at the helm, maybe uh, ACC and Ambuja could actually see substantial target price revisions, simply because there will be a bit of a valuation catch up that might come in, especially in the case of Ambuja. Uh, let's wait and watch. Standard disclosure, of course, the Adani Group is in the process of buying 49% stake in Quintillion Business Media, which is the owner of BQ Prime, which I am uh, talking to you through. Now, other conversations or other stocks in focus. ET Now has learned that Food Ministry floats cabinet note on hiking sugarcane fair price. Now, viewers, a few days back, I mentioned that people want to stay away from all pockets on which there could be some government controls. Now, keep in mind, the sugarcane pricing is a state process, but the center's um, FRP does have some bearing. And if the input cost is to go up, and I reckon that the output cost uptick is a difficult task considering how inflationary it is, I would reckon that this could probably mean some bit of pressure for the sugar companies. Now, if this turns out to be true, and if it is a larger bearing on what happens to the state advised prices, then let's wait and watch. So that's one important thing as well. Deepak Nitrite, there's a very large fire that broke out at the company's Vadodara facility. Now, in all assumptions, things would it would, impact the company's production, obviously so, and maybe some other stuff as well. But the company release does mention that the loss of assets and the loss of business as well are insured. So according to them, in their release, there is no impact as a result of this, except for the fact that the production schedule might get delayed. But they are saying that even the loss of business is insured. So maybe not that big a deal for Deepak Nitrite, but let's wait and watch. The stock may react negatively, and if it does, you know why it is doing so. Some other stocks in focus include, I don't know if QSR firms react, but apparently India is going to form a framework to check the service charge by restaurants. It's a very personal, I mean, on a personal basis, it's a very important uh, important piece of ruling that could come out, because I know of a lot of people who, for example, if you go to a fine dine restaurant and if there's a 20 people group which has created a bill of maybe 20-30,000, and you have to pay $3,000 as service charge, I mean that's a bit too high for anybody's liking. So a very important thing on a public forum per se. I don't know if it's had impact on stocks, but let's wait and watch. Kotak Bank, they are aiming to add 1 million users to a new multi-product app. I don't know if it itself adds zing to a large market cap like Kotak, but thought bring it to the news any which ways. And GR Infra Projects, wherein the company signed a concession pact with NHAI for about 1,500 crores road project. So all of these stocks remain in focus. Maybe I missed a stock or two, but I really think today is a day that is devoid of too many stock announcements. There's some queries about how Apollo Hospital stocks was okay. Let's just address that. Stock was weak despite strong commentary, and why? Well, I would reckon, and I'm not an expert here, but I would reckon that any space on which there is price disruption and larger competition coming in might see uh, an issue or two. And frankly, I know Saurabh Mukherjee in a conversation with us ridiculed these price commentary because our price falls because he thought that there is not so much of competition. But I've heard, frankly, enough number of people on the other side and who are smart money managers say that they'd rather not be in a space like this as well, because there could be price erosion. So selling from all of those could result in price erosion. It's great to think that over the long term, these businesses might not get impacted, but there could be short-term gyrations. And frankly, there have been short-term price gyrations as well. So um, I reckon that's probably one reason why overall there will be a bit of a cloud on these pockets. And you kind of see that, right? Almost every second, third day, one of the other diagnostic stocks or some of the others does have a bit of a corrective move. Now, is this a chance to buy? Maybe it is. If you hear Saurabh Mukherjee, it certainly is. So pick and choose the fund manager that you follow. Lastly, COVID updates, viewers, and which is why I've been now saying, please be careful, maybe wear a mask, because apparently mask may become mandatory in Maharashtra as per PTI. PTI also says that both Mumbai and Delhi have started to record higher COVID cases in the past 24 hours. And that's probably not a good sign. So be careful. I mean, it's imperative upon us individually, for ourselves, and for people around us to be careful as well. So it's great not to wear a mask. If you're stepping out, maybe wear a mask. It's for your own safety. Thanks so much for tuning in. Please have a safe day and have a great weekend.